This is AMU's Trading Bootcamp. If you've been wanting to become a profitable trader, then this is the best place to learn how. And by the end of today's lesson, you'll be a master in stock terminology. Let's get straight to it.
Now, first, I want you guys to learn the basic stock market terminology. So, starting with stocks, stocks are the capital raised by a business or corporation through the issue and subscription of shares. Shares are pieces of the company that you own outright. Buying shares make you a shareholder. So, if I have an Apple stock that is worth about $150, if I buy one share of Apple, I am spending $150. So you own a piece of that company outright. So bulls and bears, why do we use this term in the stock market? Bulls strike up and bears strike down. So if I say something is bullish, I mean that I think it's going up. If I say something is bearish, that means I think it's going down. So a bull market is a prolonged period of increased prices, and a bear market is a prolonged period of decreased prices. So now we're going to go over some simple terms. Trade is simply when you buy or sell a stock. Day trade is buying and selling a stock within the same day. A swing trade is holding a stock overnight or longer. So the stock market is open from 9:30 Eastern Time, New York Eastern Time, to 4 p.m. New York Eastern Time. So if you hold an option contract or a stock over a 1 day period, that is called a swing trade, or a long-term position, but in option trading we say swing. Now, when I say I am long on something, I am bullish on the stock. If I say I am short on something, I am bearish on the stock, which means I'm betting on it to go down, and long means betting on it to go up. Calls. Calls is an option trade that bets on the stock to go up. Puts is an option trade that bets on the stock to go down. Shares are pieces of the company that you own outright, and volume is the number of shares of a stock traded during a particular time period, normally measured in average daily trading volume. And we will be going over volume in more depth later on in this course. So, lingo, like I said, with any type of thing that you learn, it will have its own language. So in Atlanta, we say shawty. We say, what's happening? You know what I mean? So in the stock market, we also have our own lingo. So common lingo we use in the stock market: scalp, which means a quick day trade; swing, holding a stock overnight; TP, take profits; buying power, BP, how much money you have left to spend on a stock; hold the stock longer, long and short. Then you have gap, an empty space where there is no contracts or shares traded. Then you have shares. Then you have high of day and low of day. High of day is simply the highest price that happened within that day. Low of day, LOD, is the lowest price that a stock was at that day. Then you have FOMO, which is fear of missing out. Then you have 0 days to expiration, which means you are trading a contract on Friday, the same day that it expires, and we'll be going over that in more depth in the chapter. And lastly, risk management, RM, and that is your ability to control and use your capital wisely.